right, what's up? We got some people in the chat already. Timothy, March, Mavbet, thanks for coming on in. Love to have you. It is Friday. It is 8:30 a.m. EST, and we are about to do our charting. It's going to be a relatively slow Friday from a news standpoint that we can predict. Anyway, of course, there's always that chance. Surprise news comes out. This is trading. But in the meantime, we can take a look at the economic calendar just so we can verify there is jack squat going on when it comes to official data announcements. Nothing in the US, no heavy impact events anywhere. There's a little bit of information from Europe, German info, business climate. So if you are trading the euro, perhaps that would have been hours ago, so it's actually not even relevant, right? It might have affected something overnight. So overnight for the US, and that would be yesterday for the Europeans. So that actually doesn't really matter. Nothing going on. Going to be a nice chill Friday. Not sure how much volatility there's going to be. The market has had a pretty low level of volatility. If we take a look at the DXY on a high time frame, you can see it, of course, with the euro. You can notice, that it's a lot of consolidations and wicks. Of course, I did make a nice sum off of this move up right here, and I think we're going to see price continue to move up, but I think it will move up after a little bit of a consolidation. So we will start with the euro. I will say that it's bullish high time frame, and on the swing trading time frame here, the 3 or 4 hour, what you're probably looking at is a move up continuing. Let's see here. Let's look at this as what might happen from the higher time frame, right? So I'm going to draw a move that definitely won't be in a straight line. But we're going to look at this impulse down that occurred, and I think this is vastly due to the DXY. Now, the red tabs, not the arrows, but the red tabs that you see, those are my algo that are calling these moves down. So we'll just kind of do a brief look at my algo. The algo is going to be for rent. Anybody's going to be able to actually rent that as an indicator and use that to trade. That's coming up. My web developers are working on that right now, and the Grill and I are looking forward to offering that out. In the meantime, we're going to look at this impulse down, and there's a decent probability that the euro is going to slowly probably make its way up to about $1.09. So, just a little bit of dollar weakness happening. This is probably like an inverse of the DXY. And we're going to take a look at the DXY just because we want to get a feel for what's happening. I kind of am not that interested in looking at the Dixie for the most part. I know a lot of people do like to. One thing that's useful for is knowing which way the wind is blowing. So, it's good for high time frame bias, but the reality is all you have to do is just look at whatever chart you're trading, use the higher time frame to gather your bias, and that should be enough. But I know people like to look at the Dixie, so that's why we will look at it. Now, looking at what's happening here, though, on the euro, there's a lot of volume. There's big volume nodes right here at $1.09, right where this line is that I drew, right? And I only drew that line based on structure. So, there's a really good chance that look, the 618 is actually sitting at $1.09.75, right? It's almost $1.10, but just below that is where all the volume is in the volume nodes. So chances are what's going to happen with the euro over the next week or two or three just kind of depends on the volatility of the market. It depends what happens. I know that March tends to be kind of a crazy month, the Ides of March. It can be bearish. We'll see what happens. I think whatever the Fed does and says during that time is going to have a lot to do with what's going on. But right now, the stock market has been overall bullish. It's just a lot of bullishness in stocks. But what I think might happen with the euro is going to look like this. Just kind of a wag up with some kind of wicks, So just a slow grind upwards. That's what I see happening. And I'm, I'm looking at some higher time frame stuff for this, but there is some kind of resistance there at the higher time frame, but everything still is bullish. So I think it's going to grind up. You're going to have slow moves up with like spikes up and then spikes down, just what you've already seen, right? If you look at what's already happened in the last like several days, couple weeks, you're looking at like a grind up, spike down, grind, spike up, and then kind of a spike down, grind, spike up, spike down. So I don't see any reason for that to change. I think that is going to be the price action. And so the key here, if you are trading Forex markets, and this goes for any market really, if you can identify a high time frame trade, right? If you can, then what you want to do is look for those pullbacks. Now you could always enter anytime if it is a high time frame kind of long scenario, but if you're not entering on a pullback right there, and again, this is not investment advice, this is just, charting and rules, right? So make sure you're doing your own research. Nothing we say is investment advice. Talk to your licensed advisor before trading on markets, because you can lose money. It is a risky thing to do. But in the meantime, I like to look for these pullbacks to grab, right? And I have some algorithms that will alarm me when these pullbacks happen. So if I don't have a position and I'm confident in a good position and it's not a pullback, I'll enter, but my stop loss is going to be pretty deep. It's going to be like this. In fact, I did enter a trade much like that this morning. I'm not sharing that one because it's more of a kind of like a just get a position type trade. And then as soon as there is a pullback, that's when I'll add to that actual position and really I'll show my private group what that trade is. And again, my private group understands this is not a signal room. I'm sharing my trades. Now, they may end up taking similar trades because their own research tells them to, but, we're not a signal room. All right. So, elbow, elbow. All right, cool. So, but that is what I see with the euro. And I think if we looked at the Dixie, it's just going to literally be the opposite of that. And I know people want to see it. And then we're going to look at gold. Dixie. So used to typing USDT because I'm always looking at crypto pairs. I'll put in like Microsoft, USDT. Okay, so I did think that we were going to see a move up in the Dixie, but it looks like not right now. And that is reflecting probably why since halfway through the month, we've seen some pretty big bullishness in stocks. Now, my algo did call this move down. You can see it, this red tab right there. Just we'll take a brief moment and look at how accurate this algo is that I've built. Okay. So let's roll back to the beginning of the year. All right. Now you can trade the Dixie, but this is just going to be any like pair, right? So you have, for example, right there it says exit shorts right at the bottom. It might be kind of hard to see on this screen. Let me do this. So it's a small blue lettering exit shorts, right? So that means that if you were short from this indicator right there, it's telling you to get out. Look at that. I mean, that's beautiful. That's right at the bottom. Now, it doesn't have a long entry here, right? It just, for whatever reason, didn't call the long. The conditions did not line up. There is a short here, and then that's actually a lost trade because they don't win all the time, these algos. And I'm being flat out honest with you. Like, look, there's a loss right here. It's not a perfect algo. Nothing wins every time. But look at this beautiful long that it calls. So, it does say exit shorts here, but you would not have been in a short because you would have been stopped out of your short because of this. Probably this was a news event. This happened right at, it looks like, yeah, this was probably a news event. So just like to let you know, I don't trade news events. So even though it said to go short right here, if this was a news event, which it really looks like a news event, because that's on the 3 hour, that's a massive, massive move. There's a good chance I would not be in that trade. Decent chance. So just, little posterity there. But then here you have on the 24th of January, you have this beautiful long. And if you simply got out when it said to get out, right? Because I actually take targets. I have targets set up. But even if you just like put your stop below structure, kept it super simple, and then got out when it said, that's a 2.6 to 1, right? That's how accurate this algo is. It's killer. You remember, like even if you have your algorithm programmed, like you're actually having it automatically trade for you, you have to understand, like, okay, if you know that a news event is coming, that can ruin the performance of your algorithm, right? Like you have to know that. Here's a nice 1.19 to 1. Price actually went against for a while. So, I mean, if you have super tight stops, you would have lost this trade, right? But if, it depends on how you do your stops. Chances are I'm kind of 50-50. I might have lost this trade. I might not have because I might have put my, I'm going to put my stop below this like structure that's like right here, right next to the entry. So I may have won, I may have lost. If I put my structure up above this higher point, then I would have maybe won, maybe lost. That's not the best trade. It's a legit trade. Some would have won, some would have lost. But look at this beautiful long here. Look at this one here. Right below structure. You got a 2-to-1 here, 1.9 to 1. So, and look at this beautiful short that would be in right now. And again, this is just simply going to be reflected on like the euro going the other direction. Right now, it's said to exit shorts right here. So really, it would have been a little bit higher. You would have exited shorts like basically right here. So that's a 2.4 to 1 just called up by the algo. So this is an algo. We're going to have it in the website, and you're going to get a discount if you're an Algo Factory member. If you are not an Algo Factory member, then you will not get a discount. You'll just pay the full price, which is still pretty cheap. So understand that that's going on. And right now, the Dixie does have some bearishness to it. It's still pretty bearish, which means that anything against the dollar that is kind of like not going up on its own, but still flat would probably be going up right now because the dollar is going down, right? Dollar weakness means crypto up, usually stock market up, usually. Now, crypto being in its expansion phase and its bull market, it would actually and has been kind of ignoring the dollar, meaning that even though if the dollar gets strong, crypto has been going up. And that is historically not how it works. Like crypto has not been able to usually withstand for long periods of time dollar strength, but it has this time around. And we all know the story. We all know people are, the big money, institutional money is getting into crypto. You know that story, right? That narrative, and that narrative has been powering the market, and that's great. I'm good with that. All right, cool. So the Dixie, though, it is breaking back down, into this kind of range that I have drawn. I'm going to go to a higher time frame just to see how legit. Yeah, this range is a pretty good range. It's a decently. I'm gonna refine this range. Let me do this real quick. The Dixie has been messy. It's been a little messy because just low volatility. The market's had low volatility, so you don't have a lot of volatility. It's just kind of messy. Yeah, this is a decent range. This is pretty well drawn. So if the Dixie does continue to head down, this might be kind of a decent midterm long against this. Or if you can actually trade the Dixie, maybe you're on an exchange that has a CFD or something, you're not in the US, whatever. A good short on Dixie. I'm not saying as investment advice, but I am saying that this short might play out just from a technical educational standpoint, even with a pretty conservative stop loss. You're looking at over a 2-to-1. Maybe you have a better formula for stop loss and you're sitting at a 4-to-1, but there are like, 28 different trades on the way down on the lower time frames, if not 128. So, and again, if I flip back over to the euro, then you'll notice as soon as my computer catches up, I think my ISP is being throttled, or my IP is being throttled by my ISP. I don't know what's going on. I don't always say the friendliest things. So sometimes I get, a little bit of trouble. I'm also being paranoid, but yeah, look at this. Like again, this is the euro, the opposite of what we saw with, it's the same range, right? It's just in the other direction. So you really could frame this euro in a range, right? Euro. All right, so we're talking like a valley. I'm gonna frame this euro in a range. Valley girl. It's like back in the 80s. All right, so here we got it. So I would have this mapped out as such, more or less, right? So now this is a little bit different than the Dixie because the Dixie is at the edge of its range, while the euro is actually, it dipped below the midpoint and might be heading back up to the top of its range. So let me do a quick higher time frame assessment. And again, we'll jump into the into gold, we'll look at Bitcoin. And if you all have something you want to see, just ask. The cowboy will do it for you. Bullishness. It's kind of like on the daily, there's a decent amount of bullishness, but it's kind of like bullish against resistance, right? That's why we have that slow grind that we talked about. Let me bust out the weekly. So don't let this screen with all these panels freak you out. Like I look at this data, and I've been looking at data like this for years, and I don't use all the stuff that you see. All that gobbledygook at the bottom, that's all just like stuff that I'm testing it, or I'm only using some of it, like not even, maybe half of it or less. So I don't know if I could do this, man. That looks so complicated. No. We jump straight into the content. So if you want to know more about what we do, on the top right-hand corner, you can zap that QR code, and that will tell you what we do. Let me make this screen a little easier to see, folks. I apologize for not doing this sooner. Give me 1 second. Let's do this. That should make it easier to see what I'm doing. Okay, so now all that to say, if you zap that QR code, you find out that we help people learn how to build their own trading algorithms. And an algorithm looks more like what I'm about to show you. Give me a second. Like this. This is what a trading algorithm really looks like, right? So it doesn't have to have all that crazy stuff. Like a couple indicators, maybe. I stack indicators. Again, this is my algo that I built. You can see on the it's same on the 3 hour. You got this. Let's just kind of clock some wins on this right now. Beautiful long, right? Up to here. That's a win. Beautiful short. That's a win. It tells you when to get out. This one might be a loss. That's a tough long. I mean, you might have one because of that wick right there. I mean, we could call it a win if you're taking profit, but if you're merely telling when to get in and out, you might have lost money on that one. It's hard to say. But look at this. Look at this short. That's nothing but wins right there. Nice long right here. Tells you get out right here. I mean, this is a lot of winning, especially this last one. Oh my gosh, look at that long. Look at that long. I mean, that's a beastly long. If you merely just did what it said and you had even with like conservative stop losses, I mean, you're sitting real pretty on this. This is like entering along on Wednesday the 14th, and you can have a nice stop below the major structure on this, and just getting out when it said to get out, like right there. That's almost a 2-to-1. And if you have a better way of stops, you could have added trades on the way. I mean, there's so much profit potential, but almost a 2-to-1 just following the rules right here. Maybe even a 2-to-1, depending on how tight your stops are, or above a 2-to-1. So I'm telling you guys, the algo is going to be made available for rent, right? It's going to be like real cheap. So, and it's a group of them. It's not just one. It's like 3 or 4 at least algos. And I'm going to make, excuse me, I'm going to make an algo available for free. There's my first codable algo that I will make available for free. All right. So this is, even if you're not a member, even if you are a member, there will be one that I do give everybody access to for free. So, all right, cool. So yeah, beautiful look on the algos, higher time frame bullish, but bullish against resistance. So I do expect, like for now, like I said before, a messy kind of move on the way up to $1.09. So we've beaten the living daylights out of the euro. Let's look at gold. USD. We know more about the euro now than we'll ever need to know. Okay, so this is a high time frame look, and gold has developed this range up here. Now, if you're following us, if you're at Algo Factory, every Thursday, V the Gorilla comes in and shares with us what he learns from on high. And what do I mean by up on high? Look, V the Gorilla lost his voice this week. He actually has been just homesick, burned out. He does so much. Like, so I've been working with V since on and off since 2018, early 2018, really 2017. So the things he has going on in the background, he doesn't really talk about with a lot of people. But what I will tell you is he gets a lot of information from financial people from on high. Like, people who have like government positions and all kinds of stuff. Gold is to remain bullish. Like, I did call this move down to 1980. The Gorilla was good with that too. So if we go to a little bit lower of a time frame, I did call gold heading down here. It didn't quite make 1980. And as soon as it even got close to that, everybody was looking at 1980 because of this prior move down to like 1975 or so. So front running at 1980, right? Like, okay, that's a nice round number. So everybody saw that. Everybody bought early because everybody's buying the crud out of gold right now. So and by the way, the price is suppressed. Gold, in my opinion, should be worth way more than it is, but fine, whatever. We're trading. We don't care about what should be, right? We just care about what is. Well, right now, it does seem as if it's a little bit bearish, at least according to my algo in the short time frame. But it's popped back into this range that is going back to the beginning of the year, right? So it's just been bouncing basically between 2015 and 2060, right? And as it does that, it has these moments where it deviates. That's a big deviation. It's almost a drop into a new range, really. Like, this is like a proper deviation is going to look more like, let's see here. This is a proper deviation. That's not even barely a deviation. This I think is a deviation, but it's like a massive deviation. So it popped back into the range. Let me take a look real quick at the higher time frame just to get a taste of like what's up with the you know, what's up with the sauce. Um okay. Yeah, gold's. I'm going to tell you right now, it's bullish. It's just bullish against resistance, like so many things are right now. Okay, so what's probably going to happen is that there needs to be a period of time where gold kind of overcomes that resistance, and that generally means you're going to see a micro range. And what do I mean by a micro range? Well, we're on a 3-hour chart, so this is going to last like a number of days, and it looks as if, I mean, I can tell you for sure, price has developed at this range just in a lower time frame. I think this is a pretty fair way to look at it. Let me code this proper to my own coding. Give me 1 second. Code that blue, teal, whatever. So yeah, I think that you're going to see until this resistance that's going on that I can see algorithmically that my algos tell me exists, until that is broken, until price has had a chance to kind of reset, the gold price should be going back and forth in a micro range between 2020 and 2032, 2031. So, and now once that happens, what I think will happen is and again, this is just not investment advice, but if I were trading gold, I would be looking for a move to the bottom of this range, maybe even a deviation out like we've already seen, even a move to the bottom of their greater range, like an actual breakdown. Whenever I can see the proper move down and then my algos tell me to go long, ideally it's going to be at the bottom of this or at the bottom of this, and I would actually look for it to head back up here because we are in the midst of a little bit of dollar weakness, right? And then, there's a lot of fundamentals going on with gold right now. So, with those fundamentals, price might be a little bit compressed, a little, more than it should be. Long story short, though, I do see it behaving just like I drew. Now, it might not happen right away. It might happen way over here. It might go a little lower first. Like there's a lot of different ideas that can go on, but the charts and the algos will tell me as time goes. I mean, really, we might have already seen it. I don't think this is the case, but we may have already seen the beginning of this move up. But from what I'm seeing in the charts, it's not quite ready. So that's gold. I don't see any other requests right now. Let me take a look in the private live lab group that I've got. Maybe somebody's asking questions. We got Via the Gorilla, who's actually there. Okay, nice. V's in the chat right now. Yeah, V, if you're watching this, come say hello to us. But we got V the Gorilla, and they're giving us some like data right now. And again, that's private data, so we're not going to talk about it here. Let me take a quick look at Bitcoin before we move over to the private chat. And we'll see. I think it is following what I said it would do. Yeah. So right now it still is in that range. Okay. We have seen Bitcoin kind of come to the bottom of this range. It hasn't gone up. Well, actually, yeah, it did. It grabbed this liquidity right here. Look at that. This was Thursday at about 11 a.m., 2 p.m. Bitcoin grabbed this liquidity right here once again, right? So we are looking at this whole thing playing out. But until Bitcoin either breaks the bottom of this range, or if it comes and grabs some high up liquidity, like where, I've got this kind of trade sitting here, I'm not going to necessarily trade it. I might trade the range on a lower time frame, but in the meantime, I am looking for either a nice move up to catch some up high liquidity, which we're going to look at liquidity right now. We're going to see if the liquidity landscape has changed. We're going to see that. But let's see what's going on. So we're going to head to the Kingfisher. I'm going to show you right now how to get free credits on the Kingfisher to look at liquidity. Okay. The kingfisher.io, there's a link in the description. And, this has so many things on here. But first of all, if you spin this wheel, there's a wheel to spin under your account. And if you spin that wheel, you can get free credits just to grab liquidities. Kingfisher's so much more than just a liquidity solution, right? It's way more than that. Or a liquidity heat map solution. But these heat maps are super valuable. Price is going to go eventually to these levels. 48,000, it almost, as long as this liquidity stays where it is, because this changes. It changes minute by minute, but a lot of these things are pretty sticky. They don't change. Now, near price to the upside at 51,500 to 51,700, there is liquidity, and we got it right here. It's a little lower than it used to be. So 51.5 to 51.7. So there is a nice solid kind of bit of liquidity right here. It's a sliver, but as soon as the charts favor a move up, which is probably could happen pretty quickly, price will probably, I'm guessing, do this today. Hang out, get compressed, and then bam, grab that liquidity. Now, what it does after that is going to be dependent on a few things. For one thing, there's a little bit of liquidity up higher. Let's just say like to 52,200. There's some liquidity. I don't know that there's enough to attract price, but you got a little bit in the higher end of this range. So it simply could kind of peak up a little bit higher here, but definitely it's a high probability that once the charts favor a move up, once the algos tell me go, there's a move up to this side. Now, I could low time frame trade this if I am, at the computer or whatever. I might do that. Otherwise, I'm looking at whether price goes up or down from here. At some point, it's going to move its way down to this kind of 48 range. And let's take a quick look at the number. The main spike is right at about 48.7, 48.8. But there's a lot of liquidity around it, all the way to like 40, 49. So 48.8 to 49 is really where most of it is now. So a lot of people have taken their trades off from what it was before. Let's see, 48.8 is basically the top of this, up to 49. Okay, so there's a nice high. It's a thin area, but it's also very concentrated. So it would not surprise me to see something like this. And that's a nice trade. I would look for price to bounce off the top of this area. Perhaps the trade might look something like, trade might look something like that, right? Or, that's like that's a precise entry. Realistically, something like this, just down to this area. And then below that, historically, like in the last week or so, there's been a lot of liquidity down in the low fours. It seems that, like right around 40,500, there's a fair amount of liquidity all around that. So I would be having a possible downside target in the low 40,000 range. So let's go ahead and reevaluate our scenario here. I mean, yeah, I would go lower than this, maybe like down to here. Now, getting that entry, not being stopped out on the way, like there's a lot of different things to be concerned with on this trade, right? It might be better for me to not catch this one up here and maybe let it break out. So the ideal scenario on Bitcoin, and we're about to flip over to the private lab, everybody. So, but I'll give you the ideal scenario on Bitcoin for me, is that whatever it does up here doesn't matter, and then it breaks below this range that it's built. It's pretty well defined range. And I could, chances are with Bitcoin, it's kind of trippy. It will just go straight down. So I may have to kind of take a risk on that, or it might come up and grab liquidity too. It just depends on what's going on with Bitcoin at the time. Like if there's like not enough liquidity, it might just crash through the, down. It might just go straight down. It may also come up and grab. It just depends on how price action's going at that time. But we just got a message from V the Gorilla saying that he feels a lot better in the last few days. So ideally we see him next week. Just rest up, bro. That's all I got to say. Rest up. You gotta take care of your body first. So in the meantime, we are at the end of the show. So I do want to thank everybody for showing up. Just go over, zap that QR code, algofactory.tech. We teach people how to trade, right? We teach people how to build a trading plan. And you must
join us or die.
Just kidding. Just don't die. That's a joke. But yeah, zap the QR code. We'll see you in there. For the meantime, enjoy your weekend. And we are going to float over to the live lab. Give me just a second to set that up. All right. Peace.